Okay, as I said, good afternoon, everybody. I hope you had a good week. And it looks like next week also should be a decent week. What I would like to do, because I know still some people send me a couple of questions. They got, they're not sure should they buy or they shouldn't buy, and then they wait, and then the prices move. So I'll just take 3 minutes just to walk through the radar screen from last week and do a comparison between the radar screen from last week and the where the radar screen is this week. Okay, uh, so and I did for you something additional, which again is part of the now doing the software so that it helps me. So it basically helps you in your trading, and you will see in the radar screen in front of you, uh, and this is the image that you are going to get. Under the description here, there is a one-line summary of basically what I feel about the pair itself and the bias, which way is it going up or is it coming down. So when any of these numbers change on your radar screen, you can have like a short written plan. So for example, the Aussie CAD, the CAD is weak, so we need to buy the Aussie CAD. Okay, that would be like the general direction of the trade. And if we come to the charts, okay, we'll go and see the Aussie CAD. As you can see, the Aussie has been moving pretty much in a close to a straight line from the end of June. I mean, it was like around 93, now it is 97. We had a decent correction, and now we're sitting right below the 98.21. And the bias is to the upside. We have come above this structural point. We are above this structural point. So we have moved from down, going up, and going through several structural points. This is one of the confirmation that we need to have, that we do have an upward movement, and these structural points will become our stop. So if you buy it now, the Aussie CAD at 97.93, for example, your stop is 97.48, which is the previous structure. So if it gets below that, so you have a good trade with a small risk, and the reward, it should take you up maybe to 99. So the risk reward is about 4-1. So these are reasonably good trades. Okay, so let's go first and do the indices, and then I'll come back and show you some of the trades that you should have taken from last week and that they paid well. So let's go to the currencies here. I put this because they're all together and you can see them. As you can see, the strongest currency bar none is the US dollar, and it is grinding up. The euro is grinding down. The yen, Okay, it came down a little bit, but it's kind of holding a little bit here. The pound, as we all know, is extremely weak, and there is only one trade to trade the pound, and that is being short the pound. The New Zealand is actually in a kind of a nice uptrend, so we are going to be buying support. When we say we're buying support, that is a good trade to be a buyer of the New Zealand. The same thing with the Aussie, where in a way we'll be looking to be buying. So these are high probability trades because they are close to support. The Canadian, as you can see, this is weakening and weakening badly. It is kind of bearish because we have now here, this is a major structural point. This here is these lows. This is a structural point and it should capitulate. So we know now that we are very close to be bearish on the Canadian because the CAD is sitting on the structural point and it should capitulate. Okay, so we're definitely bearish on the CAD. The pound, of course, as we have been discussing, this is unfortunate, but I mean, I'm looking at it to go down to the 125, if not lower. Nobody is putting money in the pound, and every rally that goes up, you just see it going up for 1, 2, or 3 days, just short it and put the stop above it and forget about it. And I usually don't give in this OTP for anybody, let's call it financial advice, because it's not legal. But I will tell you what I would be doing if I was in the UK. Okay, this is just myself. I'll be looking at any of the high areas over here. Well, I mean, we will find them in the radar screen, and then I want to see what is my net worth. I mean, I know it's a little bit too late. We have missed from 150 to 131, but it's never too late. I mean, it's slightly late. So assuming my net worth, just to make the math easy, is 100,000 pounds, you can do a multiplication to add or a division to bring down. So the size of the contract of the pound in one with the brokers is about 62,500 British pound. That's the size of the contract. So each contract that you buy or sell in the British pound, it's 62,500. So hypothetically, if you go in and see what your net worth is assets, cars, anything. I mean, if you liquidate everything and you go into cash, how much that cash would be. So assuming that everything is this, I will go short let's say in this case 2 contracts of British pounds. And this is just a hedge for my net worth. This is just a hedge. I mean, we know that they said they're not going to trigger the Rule 50 or Article 50 until next year. So anytime you get a push, just short it. Don't go and short everything tomorrow. You want to be shorting at a rally, at a move higher. So for every, let's say, 60,000 pounds, you short one contract of a British pound and you hold it. And then once we decide that the market is turning around, you go and buy those British pounds back. At least you are uh, covering the loss in the buying power in the pound. This is what I would do. Again, I'm not telling anybody to do anything. This is what I would do. Okay? Uh, Coming to the yen, as you can see, the yen is pretty much in a bull market. I mean, it hasn't changed. We don't have a structural failure or anything to the downside. So the bias is still to the upside. So I'll be looking to be a buyer. And as you can see, Thursday was a big reversal day. I mean, see this green candle. I will show you on Monday. The euro is very weak, and we have the structure point at the 110, and we slightly came above it. So we might get a push higher because we didn't really capitulate after Draghi's press conference last week. Coming to the dollar, yes, we're pushing higher, but we have the FOMC next Tuesday and Wednesday. So you're going to get the cheerleaders on television. They're saying that we have not enough economic good numbers that might instigate or might force the Fed to raise the interest rates, which again, they're all, forgive me, but they're all, you know my opinion, I don't want to, but they're trying to fill the airtime. But there is no way in heaven, there is zero chance in heaven that the Fed would raise the interest rate. The Bank of Japan is not raising the interest rate. The Bank of Australia is looking to lower it. The European Bank is, the ECB is lowering. The Bank of England is lowering and is looking at quantitative easing. And the dollar is already strong. I mean, they cannot, and then we're coming into election. It just doesn't make any logical sense. And frankly speaking, I have developed a great admiration and respect for Carney, the president of the Bank of England. He's being quite forthcoming and giving a general direction, so there is no surprises, and he's being cautious, and so the foresight or the future look that everybody in the market has about the pound is that it should be continuing to come down. So with that, I doubt very much that anybody in the FOMC is going to do anything. But as usually, we might get a slight push, maybe to the 98, another 60 pips. They will come up and say they're not going to do anything, and this is going to come down. So we're going to have probably a couple of days, Monday and Tuesday, and part of Wednesday, the dollar pushing higher, and then it will turn around and come down. Okay? I'm going to summarize all of that in a minute. Now, with that said, if we look at the indices, it's important because the indices are representative of the currency. So you see the euro stock is kind of edging higher, and the DAX is kind of edging higher. This means what? This means that the euro is going to be edging down. These are in the opposite direction of the euro. I'll give you a good example so that you can see it better. If you look at the Nikkei on this Thursday, you see this big sell-off day. And if we go to the currencies, this Thursday is a big rally in the on Thursday. So they all move. The Nikkei goes up, the yen comes down. The euro stock goes up, the euro comes down, and so on. So this is pretty much the case. So we can see that the Nikkei, this is a reversal day. I mean, Thursday is a big reversal day. And the reason I'm saying that is you can see that it went above the previous daily high on Thursday, turned around and closed below the previous day daily low. This is a big reversal, and we need to respect those reversals and to take it to the downside. So the way I see this, that the Nikkei is going to come down and the yen should be pushing higher. And of course we're going to put our price points, and we'll let the market tell us if we are on the right track or not. The S&P still doing nothing. I mean, there isn't any oomph behind. So anyway, I don't want to get into too much. It's summer, and but what's important is the crude oil. As you can see, it's coming down. And this is also one of the components why the Canadian is coming down. This one already broke below the structure point. I mean, there's a structure point here, and we're already below it. So crude oil is a short. And if crude oil is a short, then the Canadian and the Mexican are short. Okay? So that's pretty much what I want to show you. So let's go to our charts. Before we go to the charts, I want you to look at I'm going to take a couple of examples from last week. I want to see something that moved. Let me show you some points from last week. Again, these are some of the trades. I mean, last week we're shorting the Aussie CAD. It's about 20 pips. This one about 60 pips. There wasn't really much movement. But the Aussie dollar, you have about 150 pips on that trade. The Aussie yen, your short was the 80.66 because it went above that structural point and it failed. So you should have taken it short around the 80.50. That's why we have changed the radar this way, because once I look at the chart and I see this becomes pink, then I know that I have a shorting opportunity. So we had a shorting opportunity in the Aussie yen, in the CAD yen. You got another in the CAD yen, you have about 170 pips. In the Swiss yen, let's say 150. Not much in the euro yen. The pound yen was very good. It traded above the If you remember last week, it went above the 140.12, and then it failed and it came back below the 140. So that was a pretty decent short. I will show you that so that you can see those trades. Okay, let me. If you look at the pound yen, the buy from last week was we're going to buy it if it goes above the 141.12. This is where it went above the 141.12. It took you the 140.12. It took you. It gave you about 100 and let's say 100 pips, and then it started selling off, and it came back to the 140.05, which is your entry. So let's say you bought it at 140.12, you exited at 140.12. You did not make any, I mean, you scratched the trade. But the next time, if you took it short from 141, it closed at 149, you have 200 pips on Friday in your benefit. Okay? That's the importance of having these points, and keep an eye on, depending how you are using these points, because they will give you a good selling point for your resistance. It's better always to sell resistance. So when it fails above one of those resistance points, it's a good shorting opportunity, because these are all structured points. Look at the New Zealand yen. So it went. This was just coming down from 36. Okay. Again, the New Zealand pound, 189. It came down to 187. You got a couple of hundred pips there. The pound Aussie, 177, 175. Another couple of hundred pips. So that's why I want you to make sure that these numbers. That you are alerted to these numbers in one way or the other. Okay, all the dollar pairs all paid handsomely last week. The pound, the dollar CAD from 130 to 131.98. The pound. So most of them we had. There wasn't much movement last week, but we really had. It was a decent week. A decent week, that's for sure. Okay, so please, for your best interest, make sure that you keep an eye on these numbers, because they are an excellent roadmap when to go in, when to take profits, and when to reverse and go into the opposite direction. Okay, so let's go to our the indices. So anyway, here is our currency indices. Okay, tell you what, guys, for some reason my trade station is giving me some hard time, so I have to close it and open it again. So just be patient. I will. Okay, it's no, so here is our. This is our dollar. as I said, we are going to play and buy, being long the dollar pairs until Wednesday. So probably it's going to come to the 97, 96, uh, or for worse, might go to the 94, which is the second structure point, and then it should reverse down because nobody wants it to go that high. Okay, so that's we're going to be. Guys, I have to close Trade Station and boot it back up because it's not responding properly. So give me a minute. Nobody has any questions. Nobody wants to ask about anything, so I can make use of this time. If you have a microphone, I can give you a microphone if you want. Did anybody take good trades last week? Did you have good trades, bad trades? Any observation on a trade? I really would appreciate your feedback on how you're doing. You had good trades. Okay, very good. Happy to hear. I hope this week is better. Okay, it's coming up 1 minute. Okay, so as I said, we're back on. This is the radar screen. I'm sorry, this is the dollar, so it's gonna pushing higher. If you look at the Australian, we'll take it in order. You see, the capital flow, no money is going into the euro. I mean, the money is leaving the euro, and it's trying to find the safe haven. So pretty much there are two common sense safe havens, which is the New Zealand dollar and the Australian dollar. The third is a reasonable safe haven, which is the US dollar. Okay? So you can see that the money is coming or going into the dollar. The Japanese yen, the BOJ met last week, and as you can see here, where is it? Okay, they have a meeting, as I said, the BOJ this week, but last uh, Where is it? The BOJ, the Ministry of in Japan said they are not really interested about doing a. No, no, I'm gonna get you to the. I will check. I will check. So, the Bank of Japan is waiting, and there is a meeting for the BOJ next week. So again, is not moving, and they said that they have enough tools in their hands to do what needs to be done. So I'm trying to find it. Anyway, that's the bottom line is they are not going to do any helicopter money. The So with that said, the BOJ is doing what it's doing right now, so technically doing nothing. So this means that the yen should strengthen. And this is the chart for the yen. We have technically we have a reversal. And as you can see here on Thursday, this is a big reversal day. I mean, this day is a major reversal day because it traded below the day before and 2 days before and 3 days before and 4 days before. It went below the last 5 days. And then it turned around and went back above 1 day low, 2 day low, 3 day low, 4 day low, and 5 day low. So this is a major reversal. And Friday, this yellow candle should have actually flown to the upside. That is the So right now we want to be taking the yen long because that is the general premise. Also, the Aussie, we have a very tight entry because the structure, the 74.78, we are 74.52. So if we buy, it's a very low risk above the 74.78. The same thing with the New Zealand. As you can see, it bounced off the 69.22 and there is a small gap here and it looks like it wants to push high. So I'll be looking to buy the New Zealand, and this is good. We had 1, 2, 3, 4, 5, 6, 7 days down. So we might get 3, 4 days up because it doesn't move in a straight line. Okay? And that's pretty much the premise which I said. So the question that John is asking, where is it? I'm trying to find it. Yeah, thank you. No, it's good. We need to understand. I mean, any question is a good question. Okay, do I think the pound will retrace the entire Brexit move as did the Swiss drop? Okay, let's see the pound and tell me what you mean by it. Here is the pound chart. So what do you mean? Do you mean it's going to go up to the 140, stuff like that? Or it's going to come down? Which direction are you looking at? Yeah, okay. The idea of it going up, again, we are discussing, we don't use opinions, John, but the idea, is it possible that it goes back above to the 150? Absolutely possible. The question is, when can it do that? Okay, fine. I mean, well, let's go. I'll show you the Swiss. Uh, this is the Swiss. This is the move of January when the Swiss flew all the way up. So this is January 15, as you can recall, 2015. That is about 18 months ago. And it's coming back. But so far, it's, yeah, it did, this was a big move here, but it's kind of moving. But Switzerland is Switzerland. I mean, the situation with Switzerland is very different than the situation with the UK. So in generalized term, will the pound go back up to around the 150 here, which it was back in July? The answer is yes, it possibly would do. But in order to get back up here, John, it has to go above the structural point. It has to go above this structural point, and it has to go above this, all these structural point 1, 2, 3, 4, 5, 6. So we are not sleeping. We are not sleeping. We follow rules in our trading. We follow rules. The only thing that we can control is the rules, and looking at the chart and see which is the most applicable rule for us to use. And this is the thing that will save us. Right now we have very big momentum to the downside. So the rule is it should be coming down. So we are going to be taking it down until the price behavior changes in a way to tell us that it is not going to go up. It's not going to continue going down. As it stands right now, it is going to continue going down. And as you can see on a weekly base, it has all the way down to 125.56. This is the next structure point. This was the breakout point at the end of the 2002 when the began of the bull move. So your question that you asked, can the pound go back up? This is the opposite way. You can ask this question a different way. If we were back together in 2002, or it goes up to here, and you tell me, Mike, can the pound reverse itself back to the 125? Well, the answer is yes, we're right here. We're pretty much near there. But moving up, it took one structure point, two structure point, and it moved in a stair-step way to the upside. Until the state we are in, it's still stair-stepping to the downside. So it's too premature from a timing standpoint to be actually looking at the pound to go up. And that is why I told you, if I was in the UK or my money is British pound, I would take a hedge. I would hedge it, and for my hedge, my stop would be above 135. I'm risking a couple of £1,000 or whatever, and just we should be coming down to the, as I said, the 125, 26. So the smart money is to the downside, John. Okay. So to summarize, we're going to be neutral U.S. dollar. with a positive bias until Wednesday. The pound, we are continuously negative on the pound. We are negative on the CAD. This goes. We are positive on the yen. We are positive on the New Zealand. Those two. And yeah, the number 3 in the positive would be the Aussie, and then the euro. So yen is number 1, New Zealand, Aussie, and US dollar together, and the euro maybe slightly neutral to positive. Will be primarily selling the CAD and the British pound. Okay? Thank you. If we go now to look at the radar screen to see some of the trades that has been in the planning session, these are some of the trades. Now, as you can see here, there is a short one-sentence abbreviation of the plan. So, for example, the Euro New Zealand. The New Zealand is strong, looking to short the Euro, and we are going to plan it to short it at 156.44. If we go to the chart, let's see the Euro New Zealand pairs. As you can see, it has been coming down, and from last week, this was the buying point last week. I mean, we bought it at the trade from last week was to buy it. The Euro New Zealand was to buy it at 154.09. Right there, this was the buy. It took you from 154.09 to 156. I mean, that was a good 200 pips to the upside from last week. So right now, if the euro comes down below the 156.44, then we are going to take it short, and the odds are that is going to be happen because the New Zealand looks strong. Okay? Make sure that you have these lines on your screen, and make sure that you utilize the radar screen. Okay? Looking at, for example, the pound yen, major bear market, it should be a good short. Looking to short the euro yen, looking to short the Swiss yen. The CAD yen, we are going to short it below the structural point. It closed at 80.70. The structural point is 80.34. So we're about 20 pips away from the structural point, and you put it to the take it to the short side. The dollar pairs are reasonably strong, so we are going to buy the dollar pairs until the FOMC. We're buying the dollar pairs until the FOMC getting out. Okay? And that is pretty much, these are all the numbers, and there is a short 1.1 line description so that you can get a feeling which way or what's the theme or thesis behind that plan. Okay? So I'm going to, this is the general pairs that we're going to buy. We're shorting the CAD and the pound. We're looking to be buying the New Zealand, the yen, and the dollar. And these are the entry and exit. I'm going to email it to you, and I hope you have a great trading week next week. Okay? Anybody have any questions or anything before I wrap it up? I'm going to save them, and I'm going to send you 2 radar screens this instant. Anybody has any questions? All right. All the best, guys. Have a good week. Have a happy trading, and have a good week. Thank you. Okay, I emailed you the radar, guys. Okay, I'm shutting the room down, John. I emailed you the documents. Okay, take care.